Good evening. Good evening, everyone. Good evening. Yes, we'll start with the session. Good evening. Good evening. Okay, so we will start with the session. One final session before you will be finally on your own to study. So let's start. So in the morning session, we finished issue of shares in the morning. We also did depreciation. We have inventories now. Uh, before, okay, shall I start? Shall I start? Is everyone ready? Good evening. Good evening. Yes. Okay. So we will be discussing as much as possible now. Before I begin in the morning, I had some other people who asked me some questions in the morning present today. Please put your doubts. I told you we will solve it in the evening. Remind me what your doubts were. We will finish that off and then we will start with NPO. I'll be solving one question, that educational institution, that question number 12. So I'll be solving that question. But before that, if you have any questions, please do ask. Bells of exchange, I remember there was one question, but there was a practice question from here also that was asked. Okay. So this question was asked as a doubt. I'm just solving some illustrations from inventories because don't have so much time. So I will just go through some important questions and people, whatever doubts you've got, right? I will go through those questions, especially for inventories. This question was asked in the last attempt for 10 marks. Good evening. Good evening. So let's do this question quickly. The P&L account of Hanuman showed a net profit of rupees 6 lakhs after considering the closing stock of rupees 3,75,000 on 31st March 2020. Subsequently, good evening, good evening. Sana, you had asked me to solve this question, right? Subsequently, the following information was obtained from the scrutiny of the books. Purchases for the year included 15,000 paid for new electrical fittings. Okay, so there are adjustments. I'll just tell you what we have to do and how to do it. I'll just guide you through it. You should try. Okay, you are doing it on your own. I'll just guide you through it because we don't have so much time to sit for me to sit and solve it as well. So I'll just tell you how to do it. Okay. So here, calculate the value of stock on 31st March 2020 and the adjusted net profit for the year ended 31st March for the year ended. Okay. On that date, on 31st March itself. So two things they've asked. One, they have asked me to calculate the value of stock. And the second one, they have asked us to calculate the adjusted net profit. Okay. Now, quickly, I will tell you how to do this. This is more like a rectification of error question. Okay, this is more like a rectification of error. You can solve this as a rectification of error question than inventories. I will tell you what it is. So we have already finished the last year. So final accounts were drawn, profits were calculated. 6 lakhs was the profit last year. The stock is 3,75,000. So which stage is this? If we are talking about rectification, what stage is this? Stage 1, stage 2, stage 3. Which stage is this? It's stage 3, right? After final accounts, it's going to be stage 3. So now you have to approach this question like a stage 3 question. Totally two things you have to do simultaneously. Okay, look at the solution. So this is the solution. So this is their solution. They have drawn the P&L adjustment account. So just like how you draw P&L adjustment account and rectification of error, the same P&L adjustment account is drawn, and also calculation of value of inventory is given over here. Now, in the P&L adjustment, we already know the profit. Take this. Good evening. So here. So this is already given in the question, the net profit. So the net profit of 6 lakh was already given in the question. So we just have to write that over here in the P&L adjustment account. This is the net profit, 6 lakhs. It was given. Okay. This one. Stock here, closing stock is also given. I hope the question is open in your material. You're looking at practice question 3. So the closing stock is also given in the question itself, 3,75,000. So you have to write this. Next, what you have to do is you have to go through the question one by one. Purchase for the year included 15,000 paid for new electrical fittings for the shop. So this is electrical fittings. We included it in purchase. This is error of principle. You should have treated it as an asset. Instead, you treated it as a expenditure. So now asset account debit, electrical fitting account debit, to purchase account, electrical fitting account debit to purchase account. Stage 3, purchase is a nominal account. So you will say electrical fitting account debit to P&L adjustment account. So P&L adjustment account will be credited with 15,000 rupees. I hope this is clear. We have credited the P&L adjustment account with 15,000 rupees. This is the first adjustment. Next. It will not come in the stock statement. You don't have to write it in the stock statement. It will not come in the stock statement because stock is not affected. Only when stock, when I say closing stock account, when I say stock account debit, stock account credit, that is when it appears the stock. Otherwise, it does not appear the stock to the stock. So it won't come in the calculation here. It won't affect in the valuation of stock. It won't affect otherwise. Clear? No. Okay. Next one. Hanuman gave away goods valued at 40,000 as free samples for which no entry was made in the books of accounts. So this is free samples, advertisement expense. We gave it as advertisement expense, entry was not passed. What is the entry for free samples? Advertisement expense account debit to purchases account, right? So advertisement expense account debit or free samples account debit to purchases account. So we have to pass that entry. Both of it is nominal account. Advertisement expense is also nominal. Purchase is also nominal. Both of those are expense accounts. So it will appear 2 times over here. You can see over here, they have written 2 advertisement samples. It's actually P&L adjustment to P&L adjustment. So both are nominal accounts, and it will come over here also. So the same thing. Again, it does not affect my stock. I did not say stock account anywhere, so it won't come in the second table. Only in the P&L adjustment which will appear, and it will appear both the times. Even if you don't record it, it is fine. You get the same answer because you debit the P&L adjustment, you credit the P&L adjustment, 40,000 rupees. Next one. Invoices for goods amounting to 2,50,000 have been entered on 27 March 20, but the goods were not included in the stock. So we have received some goods. We have entered it in the books. So it is, we had purchased some goods and we have entered it in the books. But while valuing the stock, it was not included. Probably it was in transit. It was still to reach the godown, or it was still lying outside in the truck. It was not unloaded. So for that reason, it was not included in the stock at the end of the year. So now we have to pass the stock entry for it. What is the entry for stock? Stock account debit, closing stock account debit to trading account. Closing stock account debit, it is an asset, to trading account is to be credited. Now, closing stock is an asset, uh, but trading account is a nominal account. So we have to credit the P&L adjustment account for the 2,50,000. So you can see over here, by stock 2,50,000, I have credited the P&L adjustment account. And also, you just said stock account debit. So you have to increase the stock. You have recognized that as your asset. So it will come over here in valuation of inventory. You have to add it. Because I told you, whenever you are giving effect to stock, it will be appearing in the second table. So it will come to the stock. Next. In March 2020, goods of 2 lakhs sold and delivered were taken in the sales for April 2020. So this is goods of 2 lakh was sold in March itself, but they included it in the sales. This is very important. The last 2 points are very interesting. Pay attention. So in March 2020, we had sold some goods. That is last year, but it was included in the sales of April 2020. That's the next year. So it should have been actually sales of March this year, that 6 lakh, whatever profit we have calculated. No, in that only the sales also was to be considered, but they did not consider it. They included it in the next year's sales. So that is a mistake. It is March month ka sales. So now what we should do, we should remove it from April ka sales and we have to put it in the last year's sales. So sales account of, we are talking about 31st March over here. This is the previous year, 31st March. From this, we have to exclude, from 2020, we have to include it in the 31st March sale, whatever we calculated. 1 second. Let's put that over here. Okay, so I'll tell you again what we should be doing. So look at this. We are trying to calculate the correct profit for the year ended 31st March 2020. Okay. We are trying to calculate the correct profit for 31st March 2020. So let's take this as the previous year. Okay. Now, what has happened is there was one sales relating to the previous year, which was considered in April. That is the next year. It was considered as sales in the next year. So now this is a mistake. It should have been considered as sales of the previous year. So now what we have to do to rectify this mistake is sales account of the next year. We have to debit. We have to exclude that sales because it is not sales of the next year. And we have to credit the sales account of the previous year. I hope you have followed this. 2 lakh rupees. This journal entry needs to be passed. So the sales account of the next year, because it was included in the April month ka sales, which is a mistake, it belongs to the sales of the previous year. So that will have to be credited. Now, in this, which account is closed? Both are nominal accounts, but this account is still there. This won't affect the last year's profit, right? Only this will be replaced with the P&L adjustment account. So you can see it in the P&L adjustment account on the credit side, the 2 lakh rupees will come over here. It won't come on the debit side. It will come only on the credit side, only one entry, because that was last year's sales. It should be treated as income of the last year. So in the last year, when we are adjusting, it will come. So you just have to know the rectification entry. There's a chance that you may get confused. You will say, sir, this is also a nominal account. For that, you have to know the logic. Why do I get the P&L adjustment account? P&L adjustment account is brought in rectification. We've studied it because these nominal accounts have been closed to calculate the profit or loss of that particular year. No, all the nominal accounts get closed at the end of the year. So those nominal accounts are not available in the books, and we have to adjust the profits. That is why we replace those last year's nominal accounts with P&L adjustment account. Now, this nominal account is not yet closed. This is current years. I mean, we are ready to prepare the profit and loss for this one. So therefore, this need not be replaced. Are you all following? So now this will be credited to the P&L adjustment account over here, 2 lakhs. Just focus on the journal entries. Just focus on the journal entries, nothing else. One more last one. This is also interesting. Goods costing 75,000. So this is the cost of the goods, 75,000 were sent on sale or return in March 2020. Last year it was sent on sale or return at a margin of profit of 33.33. 33 1/3% means 33.3333. 1 by 3 means 3.3333. Though approval was given in April 2020, these were taken as sales for the March 2020. So see, it was included in sales of the previous year. Although we did not receive approval in the previous year, it was not yet sold, but we have treated it as sale. This is that case one. In approval basis, we have 3 different cases, right? So this was treated as case one. It was treated as sales of the previous year. Although the approval was received in the next year. In April 2020, it was received. So now what should I do? I should pass 2 entries. That adjustment entries we learned yesterday. We have to pass 2 entries. One, we have to reverse the sales, and second one, we have to recognize it as our stock. Okay. So now to reverse the sales, I have to find out the sales price because this is at cost price. So I have to calculate the sales price. So sales price is equal to 75,000 cost plus profit. So profit is 33.33% on cost. You can directly do it because this is cost itself. 75,000 is the cost. Take your calculator, 75,000 plus 33.33. You get 1 lakh. Something, you might get some 99,999 something, but it is 1 lakh. It is 1 lakh. So this is the sales price. Is this clear? Now, we have to pass 1 entry to reverse the sales. The entry to reverse the sales is sales account debit to debtors account or to customers account. 1 lakh. At sales price, it will appear. So it will come at 1 lakh over here. And this one is a nominal account. This is previous year sales, right? So P&L adjustment account, it will come over here on the debit side, 1 lakh. Again, it will not come in the stock calculation because stock account is not involved. Even in the previous one, stock account was not involved. So it will not come. This entry won't come in the stock calculation. Next, we're not done with that last adjustment. One more entry we have to pass. No, sale or return. One is reversal adjustment. And the other one, we have to recognize it as our stock. For that, the entry is stock with customer account debit to trading account. Again, this is a stock entry. It will AS2 we will follow, which is cost or sale price, whichever is lower. Your cost price is lower, 75,000. It's directly given. So I will record it at 75,000 here. Okay, trading account is a nominal account, so that will be replaced with P&L adjustment account. So it will be credited over here. You can see 75,000 has been credited. Have you all understood this? Okay. And stock, you just said stock account, stock with customer account. So we have to debit to the stock account or we have to add it over here. So you will get, now you have to find out the balance. The balance is the adjusted net profit. And the total is the stock, actual stock. So these are, it's a good question, especially the last two or three adjustments you have to focus nicely and learn. I just told you the journal entries, how the journal entries affect our uh, P&L adjustment account. You should be a little versed, well versed with your rectification of it. I hope you have followed it. Next. Okay, this question also is interesting. I'll come to this a little later. But for now, I've solved one of your doubts. 50% of the doubt is clear. Next, bills of exchange. Someone had asked me a question. Bills of exchange, what illustration was it, Varsha? 4. The Katrak question. No. Illustration 4. Okay, Katrak's acceptance to Basu for 2,500, discharged by a cash payment of 1,000, and a new bill for the balance plus interest, rupees 50 for interest. So this is in the books of Katrak. From Katrak's perspective, we have to record this. Katrak's acceptance to Basu. Katrak's acceptance means what? It was a bill payable for me towards Basu, 2,500. We are discharging it by a cash payment. So I'm paying 1,000 rupees in cash and a new balance for the balance, a new bill for the balance. The balance is 1,500 plus interest, 50. So it's a renewal of a bill concept. So we are accepting a new bill. The institute has passed a merged entry, so you can pass the merged entry. How do we pass the merged entry? 4 things we have to do whenever you are renewing the bill. Okay, how many things? 4 things have to be done whenever you are renewing the bill. First one, you have to cancel the old bill. So to cancel the old bill, it's bill payable. Remember, so bill payable account. It is our acceptance. So it's a bill payable for us. So bill payable account debit 2,500. So we are merging. When you're merging the entry, we forget that person's account. So actually, bill payable account debit to Basu's account, I have to write. But chuck the Basu's account for now because we are trying to merge the entry. So we don't open Basu's account at all. We do it without the party account. Next, what should we do? 4 things I told you. One is cancel the bill. So I've canceled the bill. I've debited the bill. Second one, I have to charge interest. So 50 rupees is the interest, and it is an interest expense for me. So interest account will be debited. 50 rupees. Third one, I have to make the payment. If I'm making any payment. So to cash. How much payment am I making? 1,000 rupees payment I'm making. So to cash. Fourth one, we are accepting a new bill. So bill payable for balance plus interest they have said, which is 1,500 is the balance plus 50 rupees interest. This is the entry for the first one. 4 things I did. I cancelled the bill. I charged interest, which is an expense for me. I made payment of 1,000. I drew a new bill. I mean, I accepted a new bill. I hope that's clear. Next one, G. Gupta's acceptance for 4,000, which was endorsed by Katrak to M. Mehta, was dishonored. Mehta paid 20 towards noting charges. Bill withdrawn against check. Okay. So G. Gupta's acceptance, not our acceptance, someone else's acceptance, G. Gupta's acceptance for 4,000, which was endorsed by Katrak. So we had got a bill receivable from G. Gupta, which we had endorsed to M. Mehta. It has been dishonored. Okay. Simple. It is a dishonor of an endorsed bill. So you should know the entry for dishonor of an endorsed bill. So what is the entry for dishonor of an endorsed bill? Remember, bill receivable account will not come in the entry. Don't credit bill receivable. It's not my asset. I have already given that asset to someone. Endorsement means I have already endorsed. I have already transferred the asset to that person. What's the name of that person? M. Mehta. I have already given it to M. Mehta. So it is not an asset in my books. So bill receivable account will not come in the entry. Don't credit or debit the bill receivable account. It will not come over here. Rather, what is the entry is I have a right to receive money from G. Gupta because that fellow had promised a bill. He had promised some money. Now he's not paying it. So we will have to debit G. Gupta with 4,000 plus noting charges also we will recover from him, no? Which is payable to M. Mehta for us. 4,020. 4,000 is towards the bill and 22 pieces towards the noting charges. I have a right to receive the money from. I have the right to receive the money from G Gupta, and I have a payable towards M Mehta, 4,000 plus 22 pieces. So that is the entry. And then they have said we withdrew the bill against a check. So we gave a check to M Mehta to bank account 4,020 rupees. So we are giving that liability 4,020 rupees to M Mehta. We had to pay money. We gave it. That. D Dalal retires a bill for 2,000 drawn on him by Katrak for rupees 10 discount. So D Dalal had to make a payment towards this one bill, which is a bill receivable for us. He is giving that money. Simple. So bill receivable will be credited. This is retirement of a bill. We are receiving 2,000 minus 10, 1,990 rupees we are receiving. 10 rupees is rebate. So the entry is cash account debit 1,990, cash bank 1,990, discount or rebate account 10 rupees, to bills receivable 2,000 rupees. Simple. The last one is not worded properly. I'll just tell you what is happening. Katrak's acceptance to Patel for 5,000 discharged by Patel through Modi's. Here there must be a word. Through Modi's acceptance to Katrak for a similar amount. So there was an acceptance of ours, okay? Katrak's acceptance. That means we had accepted a bill to Patel, 5,000. So it was a bill payable. It's being discharged by Patel through Modi's acceptance to Katrak for a similar amount. So what is happening is, we had a bill payable. We got Modi's acceptance to Katrak for a similar amount. So we had got a bill from one more party, Modi's acceptance. We had Modi's acceptance. So Modi's bill receivable was there with me. It was a bill receivable for me for a similar amount. It was also 5,000 rupees. So I had 5,000 rupees ka bill with me, and I had a bill payable towards Patel. So I told Mr. Patel, boss, see, I will give you this bill receivable what I have. It's the same amount. Instead of me paying you 5,000 rupees, I'll do one thing. I'll endorse this bill to you. I'll give this bill to you. 5,000 ka bill I have. You keep it. And you cancel my bill payable. So I had a bill payable towards Patel. So there was a liability over here towards Patel. And there was an asset over here from Modi. Modi's acceptance was there. Bill receivable over here. So what I did was I set this bill receivable against this bill payable. So I merged it. So bill receivable is gone. Bill payable is also gone. So this is set off. So here bill payable account debit 5,000 to bill receivable account 5,000. Liability gone, asset gone. That's all. Page number, Pratiksha. If you have any question, quickly tell me the chapter name, page number, illustration number. Quickly, I will see it and tell you. Illustration 8. Depreciation. Yes, BP to BR, correct. So here, Shubhra Limited purchased a machine for 12 lakhs on 1/4/2018. On 1/10/2020, a part of the machinery purchased on April 1, 2018 for 80,000 was sold for 45,000. And the new machinery at a cost of 1,58,000 was purchased and installed on the same date. The company has adopted the method of providing 10% per annum depreciation on WTV. Okay, so what is the question on 110? How did they calculate, right? 110 20. So we are not selling the whole machine. We are selling the part of the machine, 80,000 ka machine. We are selling it for 45,000. It shouldn't be very difficult. The year-end date is 31st March. So you have to calculate depreciation on that 80,000 on that part for 2018-19 for the full year. For 19-20, again for the full year, you have to calculate. And for 2021, you have to calculate it for 6 months. So 80,000 So 2.5 years. The institute has done it directly, but you can do it separately. So 80,000 into 10%. First year for the whole year, 8,000. It's a liability, credit balance, but it is as a liability. And in the balance sheet, it is shown on the asset side as a minus from the respective asset. 8,000 for the first year. So the remaining is 72,000. On that, again, 10% for the next year. That is 1920, 7,200, 64,800 is the book value into for the half year you have to charge depreciation 3,240. So 3,240 is the depreciation for the last year, 7,200 for the year before that, 8,000 for the year before that. Total depreciation is 18,440. That was the problem. So 80,000 is the cost of the machine. For the first year, 1819, 10% depreciation on that. So you get 8,000. And after that, you have to minus it. You will get the book value at 72,000. For the next year, you have to charge depreciation on 72,000 at 10%. So that's 7,200 minus 7,200 from 72,000. You get the book value at the end of the second year. And on that, you have to calculate depreciation at 10% for 6 months, Pratiksha. I hope you have understood how to do it. Anything else? Anything else? Any other question? Inventory, one question was there. I'll go back to that. Are you understanding the doubts? Am I solving your doubts? Or not saying yes, sir, understood, sir, anything. Okay, sir. Okay. Anything else? Nothing else? Can I continue? Okay, now that educational institution we have to discuss, uh, we will do that. The NPO one question is there, no? Last question, illustration 12. For some reason, you guys find it hard. I don't know why, but it's not very hard. One or two things here and there might be a little difficult. I'll just go through the question. From the following balances and particulars of Republic College, prepare income and expenditure account for the year ended 31st for the year ended March 2020 and the balance sheet as on that date. Okay, so now here seminars and conference receipts is given. So what are they asked us to do? Very simple. They've given me the trial balance. This is the whole trial balance. See the trial balance, starting and all. It's a trial balance, debit balance, credit balance is given. They have told me to do the income and expenditure account, and they have told me to do the balance sheet. As simple as that. It's more like a sole proprietor question. So you have the trial balance. You have to prepare the P&L account, and you have to prepare the balance sheet. That's all you have to do. Now, seminar and conference receipts. Where will this come? This will come in the income and expenditure account. So we have to write it on the income and expenditure account. See this. So seminars and do one thing. Give me a minute. Okay. So I'll just go through this question because I'll just tell you, look at the textbook and we'll just mark and go. I'll tell you where what comes. You can try it on your own later. So because there seems to be a lot of more stuff that I might have to do. So we don't have so much time. So I'll just go through it quickly. Okay, ready? Seminars and conference receipts 4,80,000. Where will this come? This will come in the income and expenditure account. So here you can see over here seminar and conferences 4,80,000 was there. There's some expense relating to that, I think. So you can see where is the expense seminars, seminar and conference expenses. This one, 4,50,000. So you have to minus it. Net figure, we show it. So 4,80,000 minus 4,50,000 in the income and expenditure account. So can I show it separately? Yes, you can show it separately. 4,80,000 on the income side, 4,50,000 on the expense side. That is also fine. Your marks won't be deducted if you do like that. So here 4,80,000, they have shown the net 4,80,000, 4,50,000, net 30,000 they have shown. That is fine. Next, what else do we have? Consultancy receipts 1,28,000. See if there is any consultancy expenses. Yes, here you have 28,000. So that is again shown on the income side. You can see over here 1,28,000 is consultancy receipts. Income minus expenses of 28,000. So the net 1 lakh is written on the outer column. Next, what else do we have? So this is 28,000. That is also covered. Security deposit 1,50,000. So this is security deposit. This is not an income. This is refundable. This is a liability taken from the students. So this will come on the balance sheet. Liability side, you will see security deposits over here 1,50,000. Next, capital fund. This will also be in the balance sheet. Research fund will also be in the balance sheet. Building fund will be in the balance sheet. Provident fund will be in the balance sheet on the liability side. All these funds will come on the liability side in the balance sheet. Just check. So here you have capital fund opening balance in the column 16,06,000. Research fund, building fund, provident fund. So they have made some categories and written, can we write it together? Yes, you can write it together. There's no rule that you have to write it like this only. So it is appearing in the balance sheet. Next, tuition fee received. So this is our income, right? Tuition fee received is our income, college's income it is. So it'll come on the income and expenditure on the credit side. And there's some adjustment also relating to that. You can see over here, tuition fee receivable in the adjustments. Tuition fee receivable from the government. So government is sponsoring some students, backward class students, scholars, money, fees the government is paying, which is still receivable. The government has not yet given us. So this will come in the income side. You have to add it. It is an outstanding item. So we have earned it, but not received it. So we will have to add it. Plus, it will also come in the balance sheet, 80,000 on the asset side because it's receivable. So you can see over here, on the credit side, tuition fee and other fee, 8 lakh plus 80,000. Okay, they have not shown the calculation, but it's understood. No, 8 lakh is that whatever is there in the trial balance plus 80,000 rupees is the receivable amount. Tuition fee still receivable from the government, 8,80,000. And 80,000, which is still receivable, will come in the balance sheet. You can see on the asset side, tuition fee receivable 80,000. So that is our adjustment. Okay, so 8 lakh and 80,000. Next, government grants. Sir, what purpose is it is not given? So if the purpose is not given, we treat it as income. So you can see this on the income and expenditure credit side, you have written 5 lakh. Donations, 50,000. This will also come in the credit side, income side, you will see it. Again, not given what the purpose was, so directly it will come over here only in income and expenditure on the income side. Interest and dividends on investments, 1,85,000. Again, this will also appear in the credit side of the income and expenditure account, 1,85,000. Hostel room rent, credit balance. Again, this is also an income. So this will come on the credit side. Over here, hostel room rent, 1,75,000. Then you have mess receipts, 2 lakh. This will also come in the income side itself. Okay, college stores, I will tell you what to do about this. For now, let's just chuck it for now. We will come back to college stores. What we have to do is for college stores, so they're running a small business. You might see in your colleges and all, there might be a store, a small business, though, a Xerox shop or something like that. Inside the college premise, you might see your canteen. So for that, we have to do the trading account and see how much profit we have made from that store or from that canteen. They're selling some goods inside, so there's opening stock, there's closing stock, there's sales, there's purchasers. So we have to make a trading account. So you can see over here, this item, stock of stores, purchasers, all this will come there. So simple trading account you have to do. You know how to do the trading account, right? So they have given college stores, sales. Sales will come on the credit side. This is for the stores. Credit side, buy, sales, 7,50,000. Then stock of stores and supplies, opening stock. It will come on the debit side, 3 lakhs. Then you have purchases, will come on the debit side, which is 8 lakhs. That's it. That is for now. That's it. We'll see if there's anything else. So for now, there's a working note calculation. I'll tell you what we're calculating. Outstanding expenses. So this is outstanding expense. This is not expense. This is outstanding expense. It's a liability. Okay, they have already recognized it as a liability. It will not come in the income and expenditure account. Remember, when outstanding prepaid items come in the trial balance, that means they have already passed the entry for it. They have already passed the entry expense account debit to outstanding expense account. So they have already debited the expense. They have already added to the expense. That is why outstanding expense account is appearing in the trial balance. So don't add it again in the income and expenditure account. Directly show it on the liability side of the balance sheet. You can see over here, outstanding expense, 2,25,000. Okay. Next. This college stores we finished. This I considered. This I considered. We will talk about it again later. Salaries teaching, that's an expense. It will come over here on the expense side to salaries, teaching, research. They've written like this. You can also write separately. There is no problem. 1,20,000 and 8,50,000, right? Scholarships. This is an expense. Student welfare expenses. All these are expenses. It will come over here. So you can see over here, scholarship 80,000, student welfare expenses. Again, they have done cash this much, material this much. So I'll tell you where did they get the material from. So here you have 38,000 for now. Just student welfare expenses, 38,000 were found. We'll just take that. Then repairs and maintenance, 1,12,000. This also will be there on this side only. 1,12,000 expense side in the income and expenditure account. Games and sports expenses, 50,000. This also will be there on the debit side, 50,000. Then miscellaneous expenses, 65,000. Again, on the expense side, you will find it, 65,000. Then you have research fund investments. This is an asset. So it will come in the balance sheet on the asset side. So you can see the balance sheet. On the asset side, you have research fund investments, 8 lakhs. Fine. Then 18,50,000 asset side. This is also on the asset side. So you will find this 18,50,000 and 5,10,000 on the asset side of the balance sheet. Next, we have seminar and conference expense done, consultancy expense considered, land. It will come in the asset side, no depreciation. So I'm directly writing it on the asset side, 1 lakh. For the other assets, we have to consider the depreciation also. Buildings, 16 lakhs. See, in this question, this is all at cost, okay? Building at cost, plant and machinery, furniture, motor vehicle at cost, because this provision for depreciation separately given over here. So you have to consider that as well. Provision for depreciation will be shown as a minus. Just now I had answered someone's question. It will be show provision for depreciation that is shown as a minus. What it signifies is the depreciation till date on these assets. It is not directly the depreciation every year when you are maintaining the provision for depreciation account and are crediting it to the asset account, rather you're crediting it to the provision account. And now you're showing it as a minus in the balance sheet. So building 16 lakh minus this 4,80,000. Also see if there's any depreciation for this year, 5% at the following rates. So on straight line basis on cost, this is at cost only. So directly 5% on 16 lakhs you have to calculate. Remember, when the provision for depreciation account is maintained, these assets will always be at cost. It be at cost because the depreciation is not being credited to the asset account. It is being credited to the provision for depreciation account. So now this 16 lakhs into 5%, 80,000 is the depreciation. So what you can do is on the asset side, it will look like this. Buildings, 16 lakhs less provision for depreciation. You have already there was an opening balance of 8,50,000. And this year's depreciation is 80,000, I think, no? 9,30,000 is our total depreciation. Sorry. Oh no, what was the depreciation? Existing provision? 4,80,000 was the existing provision, not 8,50,000. 4,80,000 was the existing provision, plus 80,000 is the current year's depreciation. So total it will be 5,30,000. Have you all followed this? 5,30,000. So the book value will be 16 lakh minus 5,30,000. That's the book value of this, 10,70,000. So you can see over here. So you have on the asset side, building 16 lakhs, that's the cost. Depreciation 4,60,000 or 5,60,000. In this 4,80,000 was last year, still last year, the provision account. Plus this year's depreciation is 80,000. So total depreciation is 5,60,000. And outer column it is 10,40,000. Next you have, so that is considered, and also depreciation will come in the income and expenditure account on the expenditure side. So you can see over here, depreciation 80,000. Plant and equipment, similarly, you have to do 8,50,000 is the cost into 10% is the depreciation. So 85,000 for the current year. So it will come over here 85,000, and there was a provision already. How much is the provision? 5,10,000 plus 85,000. It will be 5,95,000. So that will come over here 5,95,000. 8,50,000 minus 595, 255 is the closing balance. If time is there, I will solve with adjustments, Anna. You're telling it to me very late. If you told me I would have planned accordingly. We will try. But this question I want to do because many people find this a little hard. Furniture and fittings, 6 lakhs. 6 lakhs is the value. There is no provision on this. So directly we have to see, okay, furniture and fittings is 6 lakh. There is a provision over here, 3,36,000. Depreciation for the current year is 10%, 60,000 plus the depreciation of the previous year is 3,36,000. So 3,96,000 is the total depreciation. So you can see over here, 6 lakh minus 3,96,000, 2,04,000. And this year's depreciation you have to write over here, furniture. Motor vehicle, there is no provision as such. Probably they purchased the motor vehicle this year. So 1,80,000 into 20%, write the depreciation directly in the income and expenditure account. And also here 1,80,000 minus current year's depreciation, 36,000. You will get 1,44,000. Okay, and there we finish. This all done. Cash at bank asset side, library on the asset side. Now adjustments. So materials and supplies consumed. Teaching 50,000, research from college stores. So from the stores only, we were doing a store account, right? From the stores only, a little bit of consumption has happened. That means you sold. It's like sold. We have sold from here. to them, to the different departments it has gone. So teaching 50,000, research 1,50,000, 75,000 for student welfare, and 25,000 for games or sports. So you total up. How much is the total consumption? So 2 lakhs plus 1 lakh. So which is 3 lakhs. So the 3 lakh has gone out. It's like sales, but internal by different stuff. Whatever that consumption is, you can write it. Total 3 lakhs. Okay, so next, tuition fee. This will come as an expense. Okay, this should be debited over here as expense, as you can see over here. 25,000 for sports and games, 75,000 for student welfare. Then you have uh, material consumed 50,000, 1,50,000. So total 3 lakhs has been debited as an expense. You don't have to write like that. You can write all the material consumed together as 3 lakh rupees directly. You can write that will come in the income and expenditure account. Okay. Next, stores and selling prices are fixed to give a net profit of 10%. This is one point which is a little difficult over here. What they're saying is they are making a profit. The stores guys are making a profit of how much percent? 10%. On this, on the sales, 10% profit they have made. So that is my gross profit. Okay. Gross profit is 75,000. This will directly come, this gross profit will directly come in the income and expenditure account. On the credit side, you can see that 75,000, this is the profit made by the stores. So that will be credited to the income and expenditure account, 75,000. And now the balancing figure in the trading account is the closing stock, because the closing stock has not been given. So this is the balancing figure. You have to calculate what is the balancing figure. That's the closing stock. The 3 lakh plus 8 lakh plus 75,000, which is 11 lakh 75,000 minus 10 lakh 50,000. This will come on the asset side. This is the only hard part. This trading account is the only hard part that you should know how to do it. So 11 lakh 75,000 is the total. And this will come in the balance sheet as stock, 1 lakh 25,000. All the other items are covered. You can see over here. So cash and library books also we'll see. No, we'll take that also. Okay, done. That's it. Then you have to calculate the profit or loss. Profit or loss needs to be calculated in the income and expenditure, surplus or deficit. That is to be added to the capital fund. So just try it. It's easy. Only this part you have to be a little careful. Calculation of closing stock. It will be done through the trading account for stores. Okay. Done, no? Now, what are the question? Final accounts practice problem one, page number, which one? So here, so can you do one solve a problem with adjustments? That means I will have to sacrifice every other plan. So this Ganguly question, I hope you're saying, practice question one, it's quite lengthy. 3 marks question. I can, no problem at all. But we will have to talk to them. I'll have to talk to them, but we will try. I will extend. I have no problem. Okay, so this question, from the following particulars extracted from the books of Ganguly, prepared trading and P&L account for and the balance sheet as at 31st March 2020 after making the necessary adjustments. So they have given your Ganguly's capital account is there, stock is there, sales written. Okay. Purchase written. Only interesting part in this question, a couple of things in there. So I'll just go through this question just like how I did for the previous one as well. Just give me a second. I'll just import this file. Okay. Practice question one. This question is important according to me, but it has never been tested because it's a little lengthy. If this question comes in your exams and an NPO Republic College question comes, which we did just now, 20 marks, two questions, 40 marks. If this comes to your exams, it's going to take 5 hours to finish the paper. So it won't come like that, I hope. But it will be very long, lengthy it will be if it comes. So they won't generally test such a long question, but the adjustments in this one can be tested separately. So I'll do this question from the following particulars extracted from the books of Ganguly, prepare trading and P&L account and the balance sheet as of 31st March 2020 after making the necessary adjustments. Fine. Capital account is given. This will come in the balance sheet. This is opening stock. It will come in the trading, purchase written trading. So can I write like this in the exam? No. Carriage inward trading, rent, P&L, salaries, P&L, debtors, balance sheet, sundry creditors, balance sheet, loan from Dena Bank at 12%, 1 lakh. This is coming in the balance sheet. Interest paid, this will come in the P&L, printing and stationery P&L, advertisement P&L, interest received P&L, cash with traders bank balance sheet, discount received P&L, investments balance sheet, furniture balance sheet, discount allowed P&L, general expenses, P&L, audit fees, P&L, fire insurance premium, P&L, balance sheet, balance sheet, balance sheet. Fine. Value of stock as on 31st March 2020 is 3,93,000. This includes goods written by the customers. Okay, I'll quickly start doing. So this is relating to the closing stock. It is there. This includes goods written by customers on 31st March 2020 to the value of 15,000 for which no entry has been passed in the books. So what is this? Goods written by the customers. Is this sales written or is this purchase written? What written is this? This is a sales written, right? Written by customers. So it is sales written. For that entry was not passed, it seems. But it has been included in stock. Don't add it to the stock again because it is included in the 3,93,000. This includes goods written by the customer. So it's already included. Don't add it to the closing stock. It was not treated as sales written. So the sales written entry was not passed. What is the entry for sales written? Sales written account debit. We have to treat it as sales written. To debtors account, to customers account. So we have to credit the customer. That means you have to minus the customer from the customer's debtors. From the debtors, we have to minus. Customers are debtors, right? So we have to minus it from debtors. Clear, right? Okay. Then purchase include furniture purchased on 1st January. Again, error of principle. This is to be treated as purchase furniture, but they have included it in purchases. It was an asset treated as a revenue expenditure and added to purchases. So now we will have to exclude it from purchases. We have to minus it from purchases. And we will have to add it to the asset. We have to treat it as a furniture. We have to add it to the asset. Depreciation, we have to consider that also. It was purchased on 1/1/2020. The books are being closed on 31/3/2020. So for 3 months, we have to calculate depreciation on the 10,000. Okay. There is furniture already. There is already some furniture, 9,000 rupees for this on the whole year because it is there at the beginning itself. 9,000 into 10% for the whole year. Plus on this 10,000, second point ka 10,000, you have to calculate it for 3 months because it was purchased on 1/1/20. So 10,000 into 10% into 3/12. I'll talk about the Dana Bank loan. Give me a little while. Sundry debtors includes 20,000 due from Robert, and sundry creditors include 10,000 due to him. This is known as mutual owing. So this is known as mutual owing. So here there's one person who has to pay me, to whom I have to pay. He has to pay me, I have to pay him. So this is mutual owing. Okay, what we do in this case is we read the sentence, we recognize the lower amount, whichever is less. So here there are two amounts. Sundry debtors include 20,000 and sundry creditors include 10,000. So we take the lesser amount. Which one is lesser, 20,000 or 10,000? 10,000 is lesser. Close your eyes, take 10,000, minus it from debtors, minus it from creditors. Over. You have to take the you have to take the 10,000 rupees, whichever is lesser. Mutual owings adjustment is very simple. Whichever is lesser, you have to take that amount, minus it from both debtors and creditors. That's all you have to do. Okay, this interest paid, interest received, I will discuss. Provide interest payable to Dana Bank and interest receivable on investments. We will do that. Make provision for doubtful debts at 5% on the balance under sundry debtors. So before we calculate the provision, we have to do some adjustments to the debtors because debtors two adjustments I saw already. One was relating to that customer who had returned the goods. We had not passed an entry, right? So we have to minus that from debtors. And also just now we saw the mutual owing. So that also needs to be minus. And then on that actual debtors, I will have to calculate provision for 5%. See if the provision is already there. Should see if we have to create or reverse the provision. Depending on the circumstance, we'll do a working note for that. No such provision is to be made for deposits. Fine. So first, quickly, Rappa, I will drop the trading account. In fact, trading account, we'll just see what they have done. It's a very simple trading account, not very complicated. P&L we will do. See the trading account. Opening stock is given. So 2,34,000, you just write it. Purchases, 12,15,500. It is there in the question. The same purchases is written over here in a column. From that furniture, it was actually in adjustment we saw, no, there was one adjustment 2. Look at adjustment 2. Purchase included furniture of 10,000. So that needs to be excluded. So we are minusing the 10,000 over here. So 12,05,500. And then there is purchase written also. In the trial balance only you will find purchase written 29,000. So 11,76,500 is actual purchases. Carriage inwards from the trial balance, directly you write sales 14,48,000. Sales written 58,000. Now this in the trial balance, I think 43 sales written was there. 43,000 of sales written was there in the trial balance. 43,000 plus 15,000 is from that adjustment. In the first adjustment, there was some sales written of 15,000. So total sales written is 58,000 that will be deducted. Did you understand how I got 58,000? The sales written. Okay, 43,000 from the trial balance, 15,000 from the adjustments, total sales written is 58,000. Out of column 13,90,000. Now that's it. Closing stock is given in the adjustment, 3,93,000. Write it as it is. Don't add that 15,000 again to this. It's already inclusive of that stock. So write it as it is, 3,93,000. Calculate the profit or loss. Gross profit, 2,79,500. Fine. Next, what we should do, we have to prepare the P&L account. So P&L account, by gross profit brought down. How much is the gross profit brought down? Please tell me. I'll write it after you tell me only. Meanwhile, I'll start writing rent. To rent. How much is the gross profit? 28,500. Salaries, 46,500. No adjustment relating to all of that. Directly, I'm writing amounts. Sunny debtors, creditors won't come here. Loan from Dena Bank won't come here. Interest paid will come over here. You did not tell me the gross profit. I'm waiting for someone to tell me what is the gross profit. 297 or 279? So interest paid, we will have to discuss. We'll discuss that. Printing and stationery. I'll write everything else first. Printing and stationery. 17,000. Next advertisement, 56,000. Next, interest received, we will discuss. Discount received, 4950. Income side. Investments won't come here. Discount allowed, 37,700. General expenses, audit fees, just write the amounts. 19,600. Then your audit fees, 3,500. Then you have fire insurance premium, 3,000. 11,650. Traveling expense, postage telegram, 4,350. Okay, now we have only those adjustment items. We will discuss one by one. Finished everything from the trial balance. Okay, sales written closing stock won't come. Purchase include furniture here, no adjustment. Depreciation. Let's calculate depreciation to depreciation only on furniture. So there's opening balance of furniture on that. 9,000 into 10%, 900 for the whole year. Plus on the addition, which was included in purchases, right? 10,000 into 10%. This is only for 3 months. 250. 1,150 is the total depreciation. Okay, next. Yeah, we will have to discuss about the interest paid. Now, listen carefully. Interest paid. How much is the total interest paid? What is the total interest paid? 4,500, right? That's the total interest paid. They have given, you can see the last but 1 point, 8th point. Provide for interest payable to Dena Bank and for interest receivable on investment. So there is some interest payable to Dena Bank then. We have some interest payable to Dena Bank. So if you just look at the trial balance, you will say, sir, interest payable to Dena Bank is The total interest expenses, 1 lakh is the balance loan from Dena Bank, it's 1 lakh into 12%. 12,000 we had to pay interest. Okay. And they have told in the sixth point, interest paid include 3,000 paid to Dena Bank. So that means we have paid only 3,000. Out of 12,000 to Dena Bank, we have paid only 3,000. That means 9,000 is still outstanding. That would be our interpretation if we do it as a regular problem. But here it is not like that. Now see the fourth point. The loan account from Dena Bank in the books of Ganguly appears as follows. This is the loan account. This is how it looks. It's a liability. So on 1/4/2019, you see the opening balance. Why balance brought down? 50,000 rupees. That is the opening balance. Then on 31/3/2020, that's the last date of the year. By bank account 50,000. Closing balance on the debit side, to balance carried down 1 lakh. So the closing balance is 1 lakh. But in that 1 lakh, the bifurcation is the 50,000 rupees loan was opening balance. At the beginning of the year, only the loan was taken. The other 50,000 was obtained on the last date of the year. So should I calculate interest on that 50,000 which I had taken as loan on the last date of the year? Should I pay interest on that 50,000 which was taken as loan on the last date of the year? The answer is no. Okay. So interest is not payable on that 50,000. So out of the 1 lakh loan, which is repayable to Dena Bank, only on 50,000 rupees, I will have to pay interest for the year. So 50,000 into 12% for the full year, 6,000 rupees is the interest payable to Dena Bank, out of which we have already paid 3,000 to Dena Bank. So calculation of outstanding interest, working note. Calculation of outstanding interest. Interest payable to Dena Bank is equal to, you have to know how to read that ledger account. It's very simple. Interest payable or expense. I'm calculating the interest expense for the year. So it is 50,000 into 12%. Sir, if you look at the trial balance, you'll see 1 lakh. But interest is not payable on the whole 1 lakh because in that 1 lakh, 50,000 was taken on the last date. So we have to pay 6,000. And how much is the interest paid? How much interest have we already paid? Don't say 4,500, although it is 4,500 in the trial balance, but they have said out of that 4,500, Dena Bank we paid only 3,000. Then whom did we pay the other 1,500 to? Someone else, probably creditors. I made some default. Bills payable. I paid it late. Something happened, so 1,500 was paid to someone else. To Dena Bank, I paid only 3,000. It's given, the fuel. So 3,000 is yet to be payable. This is outstanding interest. So in the P&L account, on the debit side, to interest paid, already we have paid 4,500. Total interest we have paid 4,500. And another 3,000 is still outstanding, which is payable to Dena Bank. So total interest expense is 7,500. In the 7,500, the bifurcation is 6,000 is towards Dena Bank and the other 1,500 is towards something else. But the total expense for the year is 7,500. The interest expense is 7,500. Similar calculation for interest receivable also we will have to do. So that is also similar. So you can see over here, interest received represents 1,000 from sundry debtors. So what is the total interest received? 7,250 is the total interest received. In this, what have they said? Interest received represents 1,000 from sundry debtors. Okay. Due to delay on their part. So they had made some delay. For that, we had charged them interest. Credit period ko tip dewe, beyond which if you pay, I will start charging you interest. So that happened over here. On their part, and the balance on investments and deposits. And the remaining, out of 7,250, 1,000 is from debtors. That means how much is remaining, how much interest is received from investments and deposits. Remaining is 6,250. That is from investments and deposits. And the balance on investments and deposits. So now we also have to calculate interest receivable from investments and deposits. Let's do that. We call it as accrued interest. can also call it as outstanding interest receivable, however you want to call it. It basically means interest earned but not received. Okay, so interest receivable or income. We have two sources of interest income. For interest payable, we had only one Dena Bank. For income, we have two. Deposits and investments are there. So see, investments. What is the rate of investments? Rate of interest 5%. Opening balance only 25,000. So on investments, so it is 25,000 into 5%. 1,000. How much do you get? 250. No, 1,250. And we have deposits also. On deposits, how much is the amount of deposits? Last but one, 1,50,000 into 10%. 15,000. So this is the total interest income. 16,250 is the total income. In this, I have received some interest income from these guys, from deposits and investments. I have received some income. So how much have I received? Have I received full 7,250 from these two sources? No. 7,250 includes debtor interest also. So from these two sources, I have received only 6,250. The remaining out of 7,250 minus 1,000, 6,250. So how much is accrued interest? 10,000. Accrued interest is 10,000 rupees. I hope you have followed this. So this will come on the income side by interest received. Already we had received 7,250 less accrued interest is 10,000. Total interest income from deposits and investments is 16,250 rupees from both sources. And 1,000 rupees is from debtors. So total income is 17,250. In that, investments and deposits, 10,000 is yet to be received because we received only 6,250 from that two sources. I hope you have followed this working. Done. One more is that provision calculation. That is also simple. Make provision for doubtful debts at 5% on the balance under sundry debtors. No such provisions need to be made for deposits. So sundry debtors, you have to see. Where do we have the sundry debtors? Here, 1,20,000. We'll do that on the calculator only. 1,20,000 is the debtors. Okay. In this, we have to minus the sales return. One customer had returned the goods. How in 15,000. So there's no point keeping it in the debtors. So minus that 15,000. Then there was one more entry, that mutual owing, 10,000 rupees. Minus that, 95,000. 95,000 into how much provision do we need? 5%. 4,750. Please see if we have a provision already in the books. I don't see a provision account in the trial balance. So create the whole provision by debiting the P&L account. It's not there, no? 4,750 debit to the P&L account. Done. 4,750. Calculate the net profit. You should get 70,500. That's it. That is your balance sheet. P&L account. Next, you have to do the balance sheet. Balance sheet is simple. It's easy. Just remember, you have to consider the furniture that add 10,000 rupees. I'll just go through it once. I'm not going to do the balance sheet. I'm just going to show you each of it here. So capital account, opening balance is given. Net profit we calculated. Drawings is given. So this is the closing. Loan from Dena Bank 1 lakh will come as it is. This is interest accrued or outstanding interest, not insurance accrued on bank loan. It's outstanding interest on that bank loan. We had done working note 1, 3,000 rupees. Then sundry creditors. Sundry creditors, what was it? I think it was 74,000 in the trial balance minus mutual owings, 10,000. Yeah, 74,000 sundry creditors was there. We have minus 10,000 and we have to write the balancing 64,000 in the balance sheet. Then you have furniture 9,000, addition during the year 10,000, 19,000 is total. Depreciation we calculated in the P&L account. Outer column, the closing book value. Investments 25,000 as it is, 1,50,000. Interest accrued 10,000 on investment and deposits. 10,000. Stock and trade 3,93,000. Sundry debtors. We did that calculation. 1,20,000 was there. In that sales return 15,000 we minused. In that mutual owings, we minus 10,000. So you get 95,000 minus provision 4,750. Outer column 90,250. Cash with Traders Bank, cash in hand, over. That's it. The institute has also done beautifully the working notes. You can just see it once. Whatever I did, the same thing they have done, probably a little precise. Okay, in illustration 8, I hope that is clear. I hope. Please say yes, sir. Okay, sir. Done, sir. Say something. I feel very weird having three systems, all stuff here open. Please react, respond. Okay. In illustration 8 of consignment, it is not mentioned 10% of the goods lost of 12,500 is at IP, and also generally we take loss at cost. But why is it considered as IP? Good question. It is that Ajay Vijay question you're referring to, right, Adar? So they have just mentioned that 10% of the consigned goods of the value 12,500 is lost. That is what they have said, right? So how is it? How do we know? See, who tells us? We logically, I am telling you, and the second one is practical. Who tells us what is lost? The consignee tells us how much is lost. Okay, and what does the consignee know? The consignee does not know the cost. Consignee knows the invoice price because we send him the pro forma invoice. In the pro forma invoice, I write the invoice price. So whatever value, if they give the value directly in the question, that means it is invoice value. Okay, that means it is invoice value. So because the consignee tells me that he has lost this much, 10%. So consignee knows only invoice price. So that's the logic behind it. So 10% is 12,500. That's invoice price. They won't calculate cost plus direct expenses and all add and all. They won't do it and tell us. 7.52 practical. Which chapter? 7.52 is which chapter? It is again sole proprietor. Unit 1. Same thing. Condition 4, it seems. You mean adjustment 4? Whoever asked me that question needs to be more precise. Okay. Condition 2. This one. Potriwal is engaged in business of selling magazines. Several of his customers pay money in advance for subscribing his magazines. Information relating to the year has been given. So you had a balance of 2 lakh advance from customers, which is related to your. This is subscription, more like an income account that you do in NPO. You can solve it in a similar fashion. In advance from the customer account is 1,70,000. So what have they told us? They have asked us to calculate how much income is received during the period. Okay. So he had a balance of 2 lakh advance from the customers, out of which 1,50,000 is related to year 1920, while remaining pertains to 2021. During the year 1920, he made cash sales of 5 lakhs. You are required to compute. Okay, simple. First, they have told us to calculate the income of the current period. See how we have done it. So here you can see 5 lakh was the money received. 5 lakh is the money received during the current period, 5 lakh. Plus, in the previous years, we had received some advance. In that 1,50,000 is relating to the current year. So 6,50,000 is the income of the current year. 5 lakh received in the current year plus 1,50,000 received in advance in the previous year, which belongs to the current year. So 6,50,000 is the income of the current year. Total money received during the year if the closing balance in advance from customers' account is 1,70,000. So, okay, we will try to do this a little differently. So here, this is income account. We know how much is the income, right? For the current year, how much is the income, how much we're taking to the P&L account, we just calculated. 6,50,000 is the income for the current year. Okay. And they have told total money received during the year. If the closing balance, we have to calculate. So we have to calculate this one. By cash or bank, we have to calculate. This is our question. Now, just like how you do subscription account in the case of NPO, same thing. He had a balance of 2 lakh advance from customers, of which 1,50,000 is related to the current year. So this is advance relating to this year, which we had received in the previous year itself. So 1,50,000. Okay. During the year 2019-20, during this current year, he made cash sales of 5 lakhs. Fine. This is part of the 6,50,000. It is there only. Don't write it separately. Total money received during the year if the closing balance advance from customers 1,70,000. So next year's to advance we have already received 1,70,000 advance. But in that last year we had already received 2 lakhs, and that 50,000 is relating to the next year. So total advance at the end of this year is 170, which includes the 50,000 which has been received previously. So only 1,20,000 is the advance money received in this year. You understood? Out of the 170 advance, 50,000 was already received as advance in the previous year itself. So that you minus, and 1,20,000 is for the previous year. If you find out the balance, 770 minus 150, 6,20,000. Yeah, 6,20,000. So you can calculate it like that. Simple logical thing I will tell you what it is. 5 lakh rupees is the income cash received in this year, right? So this you understood, I hope. Balancing figure. If you know subscription account, you'll understand this. So this is how we calculate it over here. But I'll tell you one logical thing also, which will be easier for you to understand. So this is 1,20,000. This is the 6,20,000. This is the balancing figure. Okay. 5 lakh rupees is the cash received in this year. We want to calculate how much is the cash received in the current year. Okay. We want to calculate how much is the cash received in the current year. So 5 lakh is received in this year, cash relating to this year. We have received 5 lakhs. Clear with that. 5 lakh rupees cash we have received in the current year. No confusion. Now they have said that the closing balance in advance from customer account is 1,70,000. So the closing balance in one is 1,70,000. So relating to the next year also, I have received some cash in this year. Relating to the next year also, I have received some cash in this year. The closing balance in that account is 1,70,000. Out of that 1,70,000, 50,000 had already been received in the previous years. Total 2 lakh was received as advance, and that 1,50,000 is relating to this year. 50,000 is relating to the next year. So out of the total 1,70,000 advance at the end of the current year, 50,000 was received in the previous year. That means remaining 1,20,000, right? Received in the current year. So 1,20,000 advance was received in this year, plus income of this year is 5 lakh. So total 6,20,000 is received in the current year. Money. Any other question? But subscription account, if you know the income account, that's a little easier and better to do. Anything else? Okay, no questions I'm finding. See, you can see over here. Here also they have done the same thing, which I told you through common sense. Here they have done through the account, advance account. So the opening balance, liability 2 lakhs. And that 1,50,000 is the sales of this year. So it's income of this year. So we reduce our liability. We debit it over here. And then there's a closing balance in the liability of 1,70,000. That means the balancing figure, 1,20,000 is received in the current year. Advance amount is received in the current year. So if you total up 5 lakh plus 1,20,000. 5 lakh is the cash sales during the year, plus 1,20,000. So 6,20,000 is the total money received during the year. Anything else from this chapter or any other chapter? Okay, take a breather. Uh, so now at this point, you have how many days left? 20, 29, 30. 3 days left. I hope you're starting only accounts for the next 3 days. And utilize these 3 days perfectly, okay, without leaving any stone unturned. Utilize these 3 days properly. Don't panic, don't worry. Especially, I had a very big reservation with regards to the marathon session. I will tell you what I had in my mind. Uh, some people who have not studied or not done much might get a little demotivated because when I'm doing some difficult questions and all, they might be a little, oh, sir is doing something. I have never seen this question. I have not done this question. I've not practiced. Oh, there's so much to do. I underestimated the syllabus. Thoughts like that will start coming to some of you. Okay, there is actually a lot than I thought it was there. That's a mistake. That's a mistake from your end. Okay, you underestimated the syllabus. That's a mistake. But there's nothing you can do at this point about it. So rather than thinking about it and rather than wasting time thinking about that, try to cover as much as possible in the limited period. Yeah, I'll do that, Sam. Give me 2 minutes. I have to stop. So, so please try to cover as much as you can in the next 3 days without wasting much time relating to all these negative thoughts, all these uh, things relating to what will I do 6 months again. So don't think too much. Just focus on your preparations and do the easy chapters first. So average due date, account current, all these chapters you can do consignment or depreciation. So BRS, try to finish sale of goods on employee basis. So try to finish those chapters. And even this chapter, in this I did not discuss anything in the second chapter, the subsidiary books, trial balance, cash book. So from these 3 units, question will come. One question is going to come from chapter 2, unit 3, unit 4, unit 5. 5 mark worth question will definitely come from those 3 units. Any one of those units, you will get a question for 5 marks. So go study those units. In that, there are four questions in each of those, unit or 5 questions or something. Simple, small questions. You can quickly finish it. Do those questions. It's important from the exam perspective. 5 marks that will come. And instead of panicking at this point, especially the ones who are, not studying or haven't studied much, do the syllabus, which is important from the exam perspective. And I'm telling you repeatedly which chapters to do, what you should be doing. So please do that. Don't waste time. I want you to clear. I'm saying all of this because I want you to clear. I want you to do it, and I'm sure you will be able to do it. And the ones who have been studying, who've been working hard, boss, it's time to finish well. So don't panic, don't attract negative energy and spoil this for yourself. You work very hard, you put in the efforts. This is the last stage of your preparation, 3 days, 4 days, and it can be very important. Some of you just lose this battle in these 3 days, 4 days. I mean, I've seen that happen many a times. All preparation at the last moment, they'll panic ಮಾಡುದು, ಕೈ ಕಾಲು ಹೊಡೆಯುವುದು, all of this you start doing, and ನನ್ನಿಂದ ಆಗುದಿಲ್ಲ ಹೇಳುದು. So thinking of the things that we have not covered, revised ಮಾಡಲಿಲ್ಲ ನಾನು ಸರಿ, I should have done this better, I should have done that better. So sitting and thinking of all of that, basically attracting negative energy. So don't do that. Please don't do that. So at this point, it's time to be as positive as possible and give your best. Even if I always say this, even if I don't know the hard part, okay, if you're cool, right? If you're cool, if you're calm, if you know your stuff well, execution, you focus on the execution, you can still do something in come. The problem is many of us have prejudices. Oh, NPO question, so difficult. I will not do NPO only. Oh, partnership, such a big question. Four pages, sir. I did not touch that question. Four pages, no dear You know, this is all immaturity. Don't do that. To some extent, you can still solve that question and come. And there's a high chance this is going to happen. This used to happen with me as well. When I look at the question paper, right? There's a question. There's one question. Let's say there's that Ajay Vijay question. Just now, Adil asked a doubt about. So there's that Ajay Vijay question in the question paper. So I look at that question. Oh, sure has done this. He's done it 3 times. He's done that same question 4 times. He's done 2 questions in the regular class. He's done it in the crash course. He's done it in the marathon session. The same question is done again and again and again. He's done that question so many times. 4 times he's done that question. But I did not revise it. I did not see it. And it is a question which needs revision, which will need revision. You will have to see it once. Or the company account issue of shares, the pro rata allotment, which we did in the morning, the first question in issue of shares, which I discussed today, the pro rata allotment, the oversubscription, 15-mark question. You see that question in the exam hall. You did not pay attention during the marathon also. You said, I did not study anything in issue of shares, so there's no point in looking at it. I'm going to skip it. Or NPO, just now we did that question, Republic College. I did not do NPO, so I did not see only what sir was doing. I did not see only. Imagine if that comes for the exams. It could have probably taken 30 minutes of your time in the class and another 30 minutes for you to sit and see that again. 15 marks it comes for the exams. 20 marks it comes for the exams. Oversubscription of shares, which we did in the morning. 15 marks it comes for the exams. This is because you're not cool. You're not keeping things under control. You're going by your emotions. You're showing immaturity. You're getting what I'm saying, right? So you're showing immaturity. So because of this, there's a lot of you get less marks because of this attitude. ಲಾಸ್ಟ್ ಮೂಮೆಂಟ್ ಅಲ್ಲಿ ಆಗುದಿಲ್ಲ, ಎಂತ ಮಾಡ್ಲಿಕ್ಕೆ ಆಗುದಿಲ್ಲ, ಈಗ ನೋಡ್ಲಿಕ್ಕೆ ಆಗುದಿಲ್ಲ, ಅದೆಲ್ಲ ತುಂಬಾ ದೊಡ್ಡದುಂಟು, ಅದೀಗ ನೋಡ್ಲಿಕ್ಕೆ ಆಗುದಿಲ್ಲ ಅಂತ ಹೇಳಿ ಎಂತ ನೋಡ್ಲಿಕ್ಕಿಲ್ಲ. ನೋ ಪ್ರಿಪರೇಷನ್ ಅಟ್ ಆಲ್. And when you go to the exam hall, you start kicking yourself. Arre, yaar, this was there, this he did, this was there in the textbook. I just flipped that page just like this. So this is the time where you end up committing mistakes like that. This is the time, the 4 days. So don't commit that mistake. Spend half an hour, spend 1 hour on each problem, and productively you spend that time. Don't just stare at the book with all the thoughts in your mind. Try to focus, try to concentrate. Okay. And you should be able to do it, provided you're a little mature and a little full of, most of you have the aptitude, common sense, ಸ್ವಲ್ಪ use ಮಾಡಿ, approach ಮಾಡಿ ಆಗ್ತದೆ. Okay. Now, Shana will start kicking me. She wants to do practice question 4, right? What is that question? And stop taking problem, I guess. Okay, physical verification of stock in the business was done on 23rd June 2020. The value of stock was 48 lakhs. The following transactions took place between 23rd June to 30th June 2020. Out of the goods sent, okay, so what have they said? The valuation of stock was done on 23rd of June. The value of the stock was 48 lakh rupees. And then they have given some transactions that took place between the 23rd June and 30th June. And in the last sentence, they have told me to calculate the value of stock on 30th June 2020. Fine. So 30th June 2020, that's now your purchase. Now what we have to do is very simple. 23rd June ka stock value I have 48 lakhs. Next 7 days, what has happened? They have given some story. Before I read that story during the next 7 days, just know this. Whatever has come into my go down during that 7 days, I have to add it. Whatever has gone out of my go down during those 7 days, I have to minus it. Everything at cost. Everything will be done at cost. Okay, because A is to cost or sales price, whichever is lower, generally it is cost price itself. So that is why generally at cost price only we will consider. So whatever has come in during the 7 days, add it. Whatever has gone out, minus it. That is one common simple adjustment. In addition to that, if there is any stock left with my customer, I did not consider it over here. It is my stock, but I did not count it. Or there is some stock I sent on consignment. It is with the consignee. I did not consider it. It is my stock lying with the consignee. It go down, but it is my stock, right? Ownership is mine. So I have to consider it as my stock. So that will be added. Or there is some goods which is in transportation, which is my stock. I did not consider it. Until you have to add it. There could be some subtractions also. If I am the consignee, in some cases, there is a consigner who sent his goods to me. I am the consignee. It's lying in my go down. I counted it as my stock, but it's actually not my stock. It's the consigner stock. So I have to exclude it. So you have to read the adjustments and you have to give the effect. Now let's go one by one. Out of the goods sent on consignment, goods at cost were 2,40,000 were unsold. So this we sent on consignment. It is lying unsold with the consignee. So it's my stock. I will add this 2,40,000. Simple. This 2,40,000 needs to be added. Purchase of 4 lakh were made, out of which this is during that 7 days. Okay, during that 20th June to 30th June. 4 lakh were made, out of which goods worth 1,60,000 were delivered on 5th July. So in these 7 days, I've made some purchases worth 4 lakhs. In that, we have not received all the goods in our go down yet. 1,60,000 is yet to be received. But we have received the remaining. Remaining is what? 2,40,000 we have received. But the whole of 4 lakh is my goods only, Sale of goods act. I have already purchased it. Although it is in transit, it has not reached my go down. But it's my goods only. So this whole of 4 lakhs will be added to calculate the value of stock. 4 lakh will be added to calculate the value of stock. So 48 lakhs was the value originally, plus 2,40,000 consignment stock, which is ours, added, plus 4 lakh. I will add this. This whole 4 lakh is my stock. So I'm going to add it. In that 1,60,000 is not delivered before 30th June. I have not received it. Does not matter. Have you purchased that goods? Is the ownership yours? Yes, sir. Then that goods also is yours. Full 4 lakh will be added. Okay. The next 2 points are good. In fact, the next point is very interesting. Sales were 13,60,000. So this is sold during the period, which includes goods worth 3,20,000 sent on approval. Half of these goods were returned before 30th June 2020. Okay, so we have sold goods 13,60,000, and this full is not sales. Okay, so what has happened in that it includes goods worth 3,20,000 sent on approval basis. Half of these goods were returned before 30th June. So half of those goods have been returned before 30th June. So now what we have to do is the actual sales is not 13,60,000 then. In 13,60,000, 3,20,000 is approval basis. So minus the 3,20,000, 10,40,000. 10,40,000 is the actual sales. 10,40,000 is the actual sales. So what about the 3,20,000 which was sent on approval basis? Has the sales been complete in any of those cases? In that 3,20,000 which was sent on approval basis, sale of goods on approval basis, is anything complete? Half of these goods were returned. The other half, they haven't mentioned anything. So that is also not sold. So 3,20,000 is not sales at all. The sales is not completed at all for the 3,20,000. So out of 13,60,000, the actual sales is only 10,40,000. So the remaining 3,20,000 which was sent on approval basis, we haven't received any approval yet. We can treat it as sales only if we have received any approval, right? So 3,20,000, we had sent it on approval basis, and that half has been returned. And the other half, they are silent. That means that is also not approved. We don't know what has happened with that other half. So that is also not sold. So only 10,40,000 is the actual sales. So 10,40,000 is the sales. We have to calculate the cost of this, because I told you we have to do adjustments at cost and you have to minus this. It has gone out of the godown. Whatever has gone out of the godown, we will have to minus it. It's not our goods. So we will have to find out the cost. This is at sales price, 13,60,000 minus 3,20,000. Have you all understood it? Have you all followed it? Someone say yes, no, anything. Have you understood how I got 10,40,000? Okay, now we have to calculate the cost. For that, look at the fourth point. Goods are sold at cost plus 25%. However, goods costing 2,40,000 had been sold for 1,20,000 rupees. So now here, what are they saying? Generally, we sell the goods at cost plus 25%. That is our profit margin. Cost mele 25% aaki goods and sale madudu. However, goods costing 2,40,000 had been sold for 1,20,000. So there's an exceptional item there. So now for that, we will have to do the bifurcation. We have to find out the cost now. So 10,40,000 has two types of sales in this. One is the normal sales. And the other one is the abnormal sales. Okay. So out of 10,40,000, the sales is 10,40,000 total during the period. And this normal sales. How much is the normal sales? You have to read that sentence again. Goods are sold at cost plus 25%. So normally we sell it at cost plus 25%. That is our normal tradition of selling everything at cost plus 25%. But sometimes what may happen is we might have some old, slow moving items sitting in our godown. We just want to get rid of it. So we'll sell it at a lesser price. Estu bartada, astu barli. So that attitude might be shown sometimes, right? So here that has happened. So there is some abnormal sales also, something that we have not followed our tradition of charging 25% profit and cost. We have not done that for some goods. So you can see over here, goods costing 2,40,000 had been sold for only 1,20,000. You're making a loss there. So that is abnormal sales. So abnormal sales is 1,20,000. 2,40,000 is the cost of those goods. It was sold for 1,20,000. So the sales price is 1,20,000. Then the normal sales will be how much? Out of 10,40,000, if 1,20,000 is abnormal, normal sales is 9,20,000. Now I have to calculate the cost. So cost is equal to sales price minus profit. So sales price is 9,20,000 minus profit. What is the profit they have said? They said 25% on cost, right? 25 cost plus 25%. So minus 25% on cost. We don't know what the cost is. So X, 9,20,000 minus 0.25X. 1.25x is equal to 9,20,000. X is equal to, how much do you get? 1.25, 7,36,000. So this is the cost of these goods. Normal sales into cost is 7,36,000. For abnormal sales, the cost is directly given. No, 2,40,000 is the cost of those goods. So the total cost will be, cost of goods sold will be 736 plus 2,40,000, which is 9,76,000. This is the total cost of the goods sold. So now, this goods have moved out, right? 9,76,000 costing goods have moved out of the godown. We have lost ownership of those goods. So originally it was my goods only. It was there in this 48 lakhs. I sold it during that 7 days. So which is 9 lakh. How much did we get? 9,76,000. So 9,76,000 needs to be minus because it's no more my goods. I have sold, I've given up the ownership to someone else. So that is to be minus. Sales is the minus part because it costs, because that 48 lakhs is the cost. So from that, we have to minus that 9,76,000 and we have to add that 2,40,000 as per point one because it is our goods. 4 lakhs we have to add because it is our goods. So 44 lakh 64,000 is our goods value. So what about that sale on approval basis? Should I do anything about it? So what happened with regards to that sale on approval basis? I will tell you. You will only be able to answer it. I gave, let's say this is the stock. Okay. This is the stock. Let's say, see, how many pens do you see on the screen? You can see the screen. How many pens do you see on the screen? I'm showing some pens. How many pens can you see? You can see 3 pens, right? So on 23rd June, when I counted, I said 1, 2, 3. I said 3 pens. Now, out of these 3 pens, after 23rd June, I sent 2 pens on approval basis. Okay, I sent 2 pens on approval basis. I sold it. 2 pens I sold on approval basis. Now, one was returned. Half of the goods which was sold on approval basis was returned. So it's lying in my godown. The other half is with the customer. It is with the customer. So that is also my goods only, no? Because he has not yet approved it. I have not treated it as sales. I have not considered it as sales. So that is also my goods only, which is 1 pen with him. I hope everyone is following. So I still have 3 pens. Even after 1 week on 30th June, although 1 pen is not with me, lying with me, but I have already counted these 3 pens. On 23rd June, I counted 1, 2, 3. And then I sent it on approval basis. And the ownership has not gotten transferred. If it was sold, then it would come in sales. But here we have not treated it as sales. So it's still with me. I don't have to do anything with regards to those approval basis goods. Because simple reason, ownership is not transferred. It's still my goods. If the ownership is transferred, then I have to minus. I have to treat it as sale. I have to minus. But in this case, the ownership is not transferred. It is still mine. Inventory is with the customer. It's my stock only. I've already counted it. I don't have to add it. Because it was sold during that period, during that 1 week, right? It was sold. So it was there. I have already counted it. And then I sent it during that 1 week. So we had counted it on 23rd June only. When we counted, it was there. So we don't have to add it again. I hope I'm clear. So that's it. The value of the stock is what you got earlier, 44 lakh, 64,000. That should be your value of the stock. They might do that abnormal sale calculation differently, but the answer is the same, 44 lakh, 64,000. We did it like this. The cost calculation, cost of goods sold, we did it like this. This needs to be minus. So how did I get 44 lakh 64,000? You understood, no? 48 lakhs plus 2 lakh 40,000 plus 4 lakh 2 lakh 40,000, no? With consignment stock. Yeah. 2 lakh 40,000 plus 4 lakh minus we had calculated the cost of goods sold 9 lakh 76,000. That's it. 44 lakh 64,000. None. Any other question? Any other doubts you have? Can we solve it in a ledger format? You can do it, but it will be harder. If you try to do it, it will be harder. The tabular form is easier to do. You can do through the trading account, but it will be a little harder. All that consignment stock and all, you have to treat it as your stock, you have to credit it. So there's some confusion you will start getting. So instead of that, if you understand each point, and it's easier to do in tabular form. 48 lakhs is my stock, and that 2 lakh 40,000 I have to add. 1 lakh 60,000, 4 lakh is also my stock. Cost of goods sold is to be minus. Cost of goods sold calculation here we have normal sales and abnormal sales. So the sales is 13 lakh 60,000, but in that 3 lakh 20,000 was not sold, is still with the customers unsold. So only 10 lakh 40,000 is my sales. In that 10 lakh 40,000, there is abnormal sales, there's normal sales. So do the bifurcation, calculate. That's simpler to do. Okay. One more question, my favorite question, and it's been asked once. You try, you try. I will not do it. You try. This one. Illustration 10. If you were my regular class student, we have done it. And in this, even that weighted average method is important. Cash flow, this one. Stock statement, right? Stock statement, we do this question. This is V4. Weighted average, you try this stock statement, how we do it. It's easy, you can do it. Okay, nothing else. I know few chapters I could not touch because of lack of time. But I've tried to cover at least 60, 70 marks, 80 marks with portions, topics. Even the chapters I touched, probably I did not touch 100%. Uh, because you can try, you have time in these 2 days, and it's not possible, right? Practically not possible. But I've tried my best to do the important, difficult questions, tougher ones on your request. Also, we did some good questions. So tried from depreciation, we did that. I just went through that question. NPO, I went through that question in the morning. We did that Raj question and issue of shares. If you did not watch it, please watch it. Issue of shares, one question we did. Third question I discussed in the morning. Exam question, that was 20 mark question. So we did that. NPO, we did educational institution just now. I mean, I just went through that solution. So just watch again. Some good questions we've done, difficult ones we've done. So go through it once, and uh, I don't see anything else. Do we have any doubts? Anything you want me to discuss, solve? Please let me know. If there's nothing else, I think we can stop. Have your hall tickets come? Have you got your admit cards? Have you downloaded, taken a print of your admit card? Have your admit cards come? And once you're done with the exams, don't forget to message me on WhatsApp or Instagram or anywhere and tell me how your exams went. Don't forget to do that. Okay. You got your admit card. Yes. Okay. Super. So I hope you've taken multiple prints and kept ready. If you lose one, have the other one. Take two calculators when you go, and have mentally, be fresh. Don't think too much. Don't get exhausted. After all the exams, you'll tell me. Okay, no problem. Do tell me how your exams go. All right, so I'll stop over here. If there's anything, please let me know. I'll wait for another 5-10 minutes. All the very best for your exams. uh, I want only the best for you, right? All the best. See you in intermediate. Let's hope I see you in the accounts class for intermediate. Thank you. Uh, is it which one? On 3rd January or something you have on paper? That one, is it? Language. Go write something, yeah, go write your own poems and count. Who cares in BCom? No one cares in BCom. But study a little bit and go to the exams. If it's that hard, you have other options, right? So please give some last words for exam motivation. Okay. So I've been telling you a lot of things, what you should be doing and stuff. But again, the most important at this point, the most important thing to do is not think too much about external factors. Okay. Uh, just think about the things which is in your control. What can I control? So what can I control? I can control my thoughts. I can control my preparation. Just that much. And take out your ICA material. Just stick to that one book. Don't see multiple books. Don't see multiple questions. Just stick to that one book if you have not covered it properly, right? Especially many of you wouldn't have done all the questions in the ICI material yet. So just do that book properly. Do all the questions in that book properly. See all the questions properly. And listen to someone, listen to me, that is, who has seen these exams all throughout. I've seen foundation first attempt, I'm seeing the foundation last attempt. This one is going to be the last, right, under the old syllabus. I've seen 12 attempts. This is the 12th attempt. I've seen all the 12 attempts. I've understood all the 12 attempt cup papers. I've gone through all 12 attempts ka paper. I knew how the first attempt ka paper was. I knew how the latest attempt ka paper was. Trust my words when I give you some tricks. And just stick to it. Stick to one strategy. I have developed a strategy for you. I've told you what exactly you should be doing. I wrote exams in a CPT. I've seen the last attempt of CPT. I've seen last many attempts of CPT. I've seen all the attempts of foundation. I have been teaching foundation accounts for all the 12 attempts. There were 400, 500 kids in each attempt who I taught. I've gone and written exams in Mangalore, Udupi, Bangalore. In every attempt, 12 attempts. You are going to be the 12th attempt kids. So I have seen how kids do mistakes, what kind of mistakes they do, and how they panic at the last moment. So don't let anything affect you. As much as possible, try to show some maturity with your preparation and eat well, sleep well. Don't harm your health by unnecessarily taking stress, which is not in your control. And for accounts also, now you finish accounts paper, over, done. Accounts exam is done. After that, no talking about accounts to your friends. I give this advice, what I used to follow. I give this advice to my students also. So I finished, I came up to the exam hall, crumple the accounts question paper, throw it into the dustbin, play basketball, throw it into the nearest dustbin. Okay. Done. You don't have to discuss accounts on that day. Go home, start studying law. Don't spoil your mind. Accounts did not go well. Accounts did not go well. You lose 10 marks even before you start your law paper, right? Start studying for it. You start at minus 10 if you have a baggage with you. You start at minus 10. You're not starting at zero. You're starting at minus 10. So don't do that. Accounts paper is done. It's actually done. Over. I can't control it. I can't do anything about it. So just throw that paper, crumple that paper, and throw it into the dustbin. Over. You want paper? I'll send you the link after exams. Institute will upload it. You can refer it there. Focus on law. And now also, as much as possible, this is your last one time you're studying all these chapters, okay? Rectification of error, bills of exchange, depreciation, sole proprietor. This is one final time you're starting. You should go with that attitude. One last time I'm studying all of this. I'm not going to study this again and again and again. The same thing, I'm not going to study 4 months down the line, 5 months down the line. I want to study taxation. I want to study costing. I want to study more of corporate law. I want to study accounting standards. I want to study company accounts. I want to study amalgamation, demerger. I want to study all of that. I don't want to study rectification again and again and again. So study it properly now. Study it properly in the next 3-4 days, whatever time you have. Study it properly now. If you don't study it now, you might have to restudy it again and again and again and again, which is not really ideal. You get my point, right? So give your best. Don't act foolish. Give your best. I'm sure you have the capacity to do it, but many of you don't show the common sense. You don't show that attitude, and that's why you don't get it done. So get the job done, show actions, work hard, should put how much ever efforts possible. There's only few things that you have on your radar now for the next few days, probably 10, 12 days. After your exams are over, we are on 27 December. Your exams will be over when? 31st, 2nd, 4th, 6th. Your exams will be over on 6th. So till 6th, that's around 10 days from today. So there's nothing else that you have to do. Just studies, 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 studies. Don't waste time on the phone, not even a minute, not even 2 minutes, not even 5 minutes. Sir, I will, someone sent me a link, important theory questions in accounts, Telegram link, important questions. No, don't fall for such things. This, your material, your modules are everything. You have all the important questions right there. You don't need someone to send you a link. It's there in your textbook. All of those questions are important. Just sit and study those questions properly. And this is the most trusted source. The ICAI modules are the most trusted source. There is no shortcut. There is nothing. So you have to study. You have to put the effort. And it is possible, provided you do the right things at the right time. This is the time. Do the right things at this time. Don't do anything else. Just ICA questions, and if you've seen something more which you feel is relevant, do it. And focus on the harder part, harder questions. Don't skip the harder questions. Okay. Generally, you will feel this. I'll tell you how ICA exams work. It is a compilation. You understand what is a compilation, right? So ICA question paper is a compilation of the commonly skipped questions. It's nothing but a compilation of commonly skipped questions. So commonly what students skip, right? Other than the compilation. It's nothing else. So that is why don't skip questions. If someone is skipping that question, you study that harder. Because that questions like that only will appear in the exams. So skipping is not an option. Studying as much as possible and be practical. Of course, I don't know something at all. I've not studied it at all. I've not touched it at all. At this point, I don't know how to go about it. You would have known some basics. Now, partnership account, sole proprietor, NPO, some things you know. No, you know to do the revaluation account, right? You know to do the income and expenditure, right? So at least do that, revise that little bit and go to the exam. Subscription account, 5 mark question. Even in the bigger question, it will be there. You will get some marks for the working notes. So do that and go to the exam hall. Don't skip anything completely. As much as you can, see where you're standing in all the chapters. You just see what your favorite chapters are, what are your weaknesses. Don't skip anything. I'll keep repeating this. Don't skip anything completely. Don't skip anything completely. Do something and go. Okay. And in the exam also, ensure for accounts paper, you have to, this is the final instruction I'm giving you. You have to attempt for more than 90 marks. You attempt for anything less than 90, 95 marks, you fail. It is not possible. So you have to attempt for more than 90, 95 marks. If you have attempted for 70 marks, 75 marks, you're at the mercy of that valuer. He has to give you that extra mark everywhere if you have to get decent marks. So you attempt for 90, 95 marks. That is when you will end up with, say, 70, 65, 70, 75 and all. It's not like UC. I attempt for 75 marks, I'll get 74 marks, I'll get 72 marks. It's not like that in CA Foundation. They will find errors. You would have told, no, sir, I have done it properly. But he would have found some mistake in that also. What you think is right, no? He will find some mistake in that right also. According to you, it is right. But he will find some error. and he'll deduct marks. Or you would have made some silly mistake which you did not realize with them. So that is the danger of attempting for only 70 marks. That is the danger of attempting only 65 marks. So you have to attempt for more than 90 marks. Maximum you have to attempt and come. No going for 75. I will give best 75 marks and come in the exams. Out of 75, I will score 70 marks. I'll score 65 marks. Not possible. Very hard to do that. Okay. So attempt for maximum. Attempt for maximum. So what if I'm not able to do it? I'm worried about it. Don't be worried about it. Just be cool. Just be strong. Mentally, you be strong. It is possible. Okay. And by chance, I could not do it. There's no point in worrying about it after it is done. But now you have to go with that mission. That was, I will have to write as much as I can. And don't waste time daydreaming over there. Especially the first 1 hour, there is a chance that you just go so slow that you create a big mountain to climb at the last 30 minutes, 45 minutes, and the quality of your answers will dip in the last 30 minutes. So again, we end up losing 5 marks by doing that mistake. So to maintain that pace when you're writing the exam also 3 hours, have specific targets. That's why doing previous year question papers helps a lot for your confidence. When you look at the question paper, most of it you will be knowing the sequence of the questions. If you've done the past year question papers, right? If you see 4 question papers, you will know sequence of questions. You will know average due date is the third question, account current is the third question, company accounts is the last question, partnership account question comes over here, NPO comes over here. So you go with a ready strategy. Half of your strategy is already set. Even before you get the question paper, you know where to start. So we start with the questions which we know, and half of my strategy is already ready. I don't have to sit there and do a strategy. I've already done my strategy and I'm ready with my strategy. So that is the attitude you have to show going to the exams. You have to put some work, put some practice, do some extra efforts in these last few days. Right? Thank you. All the very best. I'll not take more of your time. I want you to study, 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 study. Right? See you guys. Bye bye. All the best. My best wishes are always with you. Do well. Thank you.